Hello? That's better. Hello, everybody. My name is Johan Bradley. I work for SRK Consulting based in Skellefteå. I'm actually standing in for a colleague of mine that was supposed to be presenting on hydrogeology. I don't actually know much about hydrogeology. As a colleague of mine pointed out yesterday, water tends to flow downhill, which is about the extent of my knowledge. So I'm going to present on something else. Something which I think is very important for us all to get right, and that is understanding feasibility studies and international reporting requirements. Ultimately, the industry needs investors, and those investors need to have confidence in what we're saying, and be able to compare projects both nationally and internationally. And that's something that we all need to be aware of, I think, in the industry, and it's something we deal with on a regular basis in SRK. So before I go into feasibility studies, I'll just talk about some of the experiences we've had in the last few years in the Nordic region. I would say in the past that the industry has been dominated by a few large organizations, companies like Outokumpu, LKAB and Boliden. These companies have had the luxury of being able to fund their projects internally, essentially from their own cash flow. In the mid-90s, there was a big change. Both in Sweden and Finland, the mining laws changed and essentially opened up the region to international investment, which meant there was quite an influx of small companies listed overseas, which is the situation we've got today. There's a large, I started working in the region in 97, 98, and at that point you could have probably counted the number of international companies on one hand. The situation is quite different today, which means the region has to adapt, and I think one of them is on understanding reporting requirements and what is considered the norm internationally. Today you've got a large number of companies active in the region, both from junior companies through to majors, and the challenge for us is to improve the standards of reporting in the region, so we're in line with these international companies coming in. As I say, in the region there is a particularly limited history of public funding of particularly early stage projects. The region is adapting certain codes. The codes that we've come across that are most vanligt normal are the SIM Canadian codes and the Australian JORC code. Now the concepts are not particularly new. I think for the companies like Boliden and LKAB and Outokumpu, they're essentially the same basic concepts, but I would say that the formats and some of the definitions are new, and that's what we need to work on to bring those into line within the region in order to gain access to international debt and equity finance. The basic principles, you've probably heard of these before. Transparency, essentially making sure that everything is clear in the reports, whether that's press releases or presentations or technical reports. Competency, making sure the right people with experience are signing off on their respective aspect of the report. And materiality, making sure that the investor has all the information he needs to make an informed decision. Essentially, in the international reporting codes, there's study levels and there's resources and reserves. Now, I don't have time to talk about both, so we're just going to focus on study levels, which is essentially feasibility studies. This is some of the typical, there's a few ways to break down your typical progression from exploration through to production and closure. This one this one works fine. I think it's a typical one that I've seen used in several occasions, and really it's this assessment phase that we're most interested in when we're talking about feasibility studies. Exploration is quite obvious. You're looking for something. Discovery, you've found something interesting, and it's the assessment. Does the project warrant further investment to take it through to production? There are typically referred to as three levels of study, and those are scoping, pre-feasibility, and feasibility studies. Collectively, we refer to those as the feasibility study group of work that needs to be done in that assessment level. So what are feasibility studies? Well, you probably all know this, that it's a comprehensive study essentially to determine the economic feasibility of the project. You make the decision as to justify continued investment, and it provides both technical and commercial recommendations at any particular stage of the project, and also quantifies risks and identifies areas of further study. So just looking at in a little bit more detail about the breakdown of what's typically part of your various levels of study. Within a scoping level study, which is often your first stage of multidisciplinary review, you'd typically be expecting inferred resources at scoping level stage. The question you're trying to answer is, does it make any sense to spend more money on this project? You use the available data, which is often sometimes quite limited. It may compose the majority of historic data, which is often the case in the Nordic region. And you tend to have to make quite a lot of assumptions from benchmarking, whether that's from metallurgical test work or mining costs. In our experience, these studies tend to take between 4 to 6 weeks. You're looking at an accuracy in terms of your capital and operating costs of about plus minus 50%. In Canada, these studies are referred to as PEAs, or preliminary economic assessments. In a pre-feasibility study, you're trying to assess the various options for mining and processing, and through the course of the feasibility study, present options and valuations to determine the preferred option. You'd be looking to have elevated your project to indicated level of resources with a view to converting those to mineral reserves. This is actually an essential step, and often one that is missed, I think, not only in the region but globally. And I think we've actually submitted quite a few proposals for projects that have been at scoping study, with the client looking to take it directly through to feasibility study. What we end up actually doing is putting a pre-feasibility study within the work that's required to get it to feasibility study. Because I think you can't actually get around the fact that you need to look at the various options, and you can call it mining option study, or you can call it process option study, but essentially you still need to go through the selection of your key available options and decide which one is the most preferable to take through to feasibility study. Because feasibility studies cost a lot more money, and what you're trying to do is limit your risks before you actually start spending the big bucks. Typical duration could be 4 to 8 months. I think we submitted a proposal recently, and we estimated, I think, over a year for this particular project. So it depends hugely on the amount of available data and the size of the project. And you're aiming for maybe 25% accuracy in your capital and operating costs. Your feasibility study will be on the chosen option from the PFS. That might be based on the NPV, or if you're maximizing the reserves, or whatever the client decides is the preferred option. And the outcome of the feasibility study will be used to support a board decision whether to go ahead and develop the project. Often the feasibility study is used to support project financing, and the technical details of the study inform the environmental and permitting aspects of the project before it goes into construction. 1 to 2 years, and ideally plus minus 10% accuracy on your capital and operating costs. Regardless of the level of the study, the technical aspects of the project that need to be considered are pretty much the same, and it's you look at the geology and resources, which is the fundamental base of any project. How much metal have you got on the ground? How confident are you that it is there? What is the nature of the mineralization? The geotechnical considerations, which are very important for determining your mining methods. And I suppose the most important are mining studies and the processing studies. What is bankable? I think we should let the banks decide what's bankable. It's bankable when you get the money in your pocket, essentially. It doesn't have to be, it could be economic, but the banks may not give you the money because it doesn't satisfy their lending requirements. Conclusions. International reporting standards should give us a chance to access international financing. The scoping study is your first multidisciplinary review. PFS, evaluate your preferred option, and the feasibility study should support a decision whether by the board or whoever's financing the project to progress it through to development construction. Let the banks decide what's bankable. These are the SRK offices globally. We've been in Skellefteå for 5 years. We're now 10 people, mix of disciplines, and we are at booth 157 if you want to come and talk to us about any projects. Thank you very much.